Oh, good morning, dear members. Thank you for joining in today on Saturday morning. Thank you, Nilesh Joshi sir, for accepting our invitation. I guess with your profile, which I've seen, you are the best one to guide us for the bank audits. So we are very lucky enough, during just we are about to start bank audits very soon within 10 days. So before that, we'll get a good knowledge about bank audits. So before starting with the session, I would like to introduce CA Nilesh Joshi sir. He has a wide experience in banking, mutual funds and insurance audits. He's a partner in Mukund M. Chitle and Company. Uh, he has experience in assurance services for more than 16 years. He has led special audits of a bank on behalf of RBI as well. He has handled central statutory audit of public sector banks, foreign bank branches, and cooperative banks. He has handled concurrent audits of areas like treasury, trade finance, advances of public sector, private sector, and foreign banks. He has handled statutory audit of foreign insurance company branches, mutual funds, NBFCs, and internal and concurrent audit of mutual funds and insurance companies. He has also wide experience of special inspection of mutual funds. He has been involved in special assignments, management audit for banks and mutual funds. He is a member of study group formed by the ICAI to revise the guidance note on bank audits. He has conducted various valuations, due diligences for domestic and international investors. He has been involved in reviews for processes of one of the largest registrar and transfer agent to make processes lean. So, with this massive, great experience, I would request CN Nilesh Joshi to proceed with the session, sir. Thank you. Thank you once again.
Thank you. Thank you, Avajaji. So I have divided session in three parts. One is first is audit planning, which is the most important. Then advances, and third is IRAC, which is our near to heart subject. So in audit planning, when we talk about audit planning, we need to divide the whole bank branch audit in three parts. One is planning, that we need to give 20%, advances 30%, deposit 10%, other areas 10%, reporting and certification 10%, and documentation 20%. So why I have allocated 20% to the planning is that planning is the most important, because what happens normally, bank branch audit is a phenomena where which is those who are not doing concurrent audit is a phenomena which happens in once in a year and the time which we spend for the bank branch audit is only 10 to 15 days in total year. And those who are doing concurrent audit, they are always updated with the circulars and regulations which have been issued by RBI on time to time basis. But what happens, those who are not in concurrent audit, then in such case, updations of these regulations and circulars on regular basis, it's quite difficult because of our busy schedule during the whole year. So for this purpose, we always need to have updation in respect of bank RBI circulars guidelines, and for that the very useful tool is the publications by the institute, that is guidance note on audit of banks, and a publication from WRC, which is related to the bank branch audit. So if you go by these two publications, you will get, and if you go through, so now this guidance note is also bifurcated into two parts. One is for statutory central audit, other is for statutory branch auditors.
Please stay on mute, members. It's disturbing. Yes, sir. Sorry.
Statutory branch auditors. So and that is two portions are separately can be downloaded from the ICI website. So if you go through those, go through the statutory branch auditor related portion, it will be a very useful tool for conducting audit. But what happens that nowadays there are normally three software used by the banks. One is Finacle, other is FlexCube, and third is Banks 24, which is used in State Bank of India and all other and some other banks. Finacle is widely used by various banks. FlexCube is not that popular in PSBs, but still it is used by a couple of banks. So what happens that when we go for audit, we should not be wondering how to use those software, how to use those commands. So on Google, if you search, there are various commands available for this software which can be used. Also, when you go to the branch, they also have a manual which talk about, which mentions how this software command should be used and what kind of a report should be generated. So while we are at office, once we get the offer letter, we send acceptance, and at the same time, if that branch was under audit, then we normally send then we should send a NOC to the previous auditor. In case of bank branch audit, normally NOC is immediately received by the NOC should be followed up with the previous auditor and should be received by, and it can be happened on the scanned email document also. So it should not take time, or if it is taking time, then you should contact the appointing authority and request them to speak with the previous auditor and get the NOC. So in the meantime, still you get the NOC, which normally take around a day. You can start going through this guidance note and RBI circulars which are available online, and you can also take a session of couple of hours in your office to get your article assistants or your assistant to get conversant with these RBI circulars and guidance note. So for that purpose, you have material like which is a ready-made material like WIC bank branch manual is available, and you can go through, you can prepare, you can train them for that purpose. If it is Finacle, then there is also commands which are required for Finacle are already there on the ICF website, which can be used. You can tell them, so you will be ready with all your preparation before you are going to the branch. So while once you get a branch allotment, you can speak with the branch manager. You can have a, if it is in your city, you can have personal visit. If it is not in your city, you can arrange a Zoom call with the branch manager. Now all these branch managers are used to all online meetings, so they are okay and they are available for such meetings with your time schedule, and you can understand what is the branch is, what are the nature of the branch, what are the products which branch are serving. So that will give you a understanding how you should need to plan your audit. So the references which I have mentioned earlier is RBI circular guidance note on audit of banks. Then there is a technical guide on revised formats of long form audit report, and technical guide on audit of internal financial controls in case of public sector banks. So once you give a call or once you meet the branch, following questions we should ask from the branch is basically what is the nature of the branch, whether it is a deposit based branch or it is an advances based branch. So if it is a deposit based branch, then comparatively your time for advances which you need to spend would be lower. If it is a advances based branch, you have to give more time to the advances, because then there could be various products which branch is dealing with when it is advances based branch, and whether the branch has more cash credit loans, whether more term loans, that also you need to understand. So this is kind of a checklist which you need to have with you. Then previous year LFAR you should ask for, then concurrent internal audit report. And when I say internal audit report, it includes all kind of inspection reports which might have been conducted by internal inspection, maybe a revenue audit, maybe an information systems audit, expenses audit, and regular internal audit, and also get the open issues of all these audits. So this will, whatever open issues till the end of the year is a direct reporting point for you in LFAR, because in LFAR you have to comment on the quality of these audits and open issues. So you can directly take those issues in the LFAR, and what action branch has taken for those issues you need to see. If branch has undergone RBI inspection, then RBI those inspection reports should be available with the open points that needs to be gone through. So before going to, and you can ask branch official to share this data on email except the RBI inspection report, so that you can go through it when you are before starting the branch, and that can be one of the session or one of the portion in your bank branch audit for the training related aspect when you do it training at office. So my request to all members is that please carry out or please conduct internal training at least for a couple of hours, so that your staff is get acquainted with the bank branch audit, how it should be conducted, and what are the regulation or what are the regulatory guidelines are that. Because what happens that if it is a one year one time ritual in the year, even certain articles you were with you people, might have been completed their articleship in the previous year itself, so those were not available with you now. So you have to train the new article again, and we cannot go when the bank branch audit statutory audit is like 10 matches, 10 match. So in 10 match you don't have time to do kind of a training session, training at on ground, which normally happens in case of a tax audit. When in case of one client it could be a training, but other client it has to be a, then they have to be on toes while carrying out audit. But in case of a bank branch audit, it cannot be a training ground. And in such scenario, what happens that what happens that the bank get a very bad impression about the auditors, and they give we as statutory auditors, certain CFOs told us that see, bank branch audit people are conducting it as a training for them, and training for their articles, and because of that a lot of time gets wasted, and the returns are getting delayed, and the quality which you want to have from the bank branch or from the branch audit we are not getting. So we as a profession, we don't want such blame from any of the auditing, and because of that the training to the article is very important on bank branch audit. Similarly, what we have to now, what happens that when we conduct any audit, what happens is that we start with basic preparation for the audit planning. But in case of bank branch audit, what happens that there are various reports needs to be submitted, and so deliverable list is much larger or longer than what we submit in case of any normal audit. Even in case of a normal audit, I believe that the planning also should involve the review of deliverables. Like if we are conducting a company audit, then there is a clear understanding of what we need to deliver, like main audit report as per standards on auditing 700, then caro report, then we need to test whether the caro is applicable to that company or not, and then tax audit, if that company is a tax audit, then tax audit report, what is the difference between, like our articles needs to know what is the difference in form 3CA and 3CB, what is 3CD. So if with that kind of understanding, if they go to any audit with the deliverables in mindset, their audit will be fruitful. Similarly, in case of a bank branch audit, main audit report what we submit under SS 700, then there is a long form audit report. Couple of years back, RBI has revised the long form audit report to include the new areas or new products and new technology which is coming in the bank, which has come in the bank. And to understand that, then there are various certifications which are required by RBI, and your certifications have been relied by the statutory central auditors, because they cannot go to each and every branch. Statutory you have been appointed, so it's not like that statutory central auditor, we are statutory central auditor of certain banks, so it's not like that the statutory central auditor is something above you. Rather, we always consider branch auditor as our partner in the whole scheme of thing, and if they report correctly, then our final certification or final reporting to RBI will be correct. So when bank branch audit is the most important aspect in the whole bank audit in case of a PSBs, because bank branch would always feel that my responsibility is restricted to my branch. Actually, that is not the case. His responsibility, though it is restricted to his branch, but even a single query of a branch auditor can have repercussion on the bank systems, bank controls. I will give you an example. In one of the branch where in one of the banks where we were statutory central auditor, one branch auditor raised the issue related to calculation of diminution in fair value and he identified certain conceptual errors which bank is doing in case of one of the products. Now when he, fortunate, he was a very good person, and he immediately flagged it to us that this is what a conceptual issue is happening in calculation of diminution of fair value in one of the retail product. Because what happens that statutory central auditors are doing top 20 branches, so in those branches most of these are corporate advances, and certain retail products are not served by those branches. It goes to RS, retail asset processing center, or a specific branch. So at no point of time the statutory central auditor will come to know what kind of approach bank is adopting for certain products in case of a retail segment, and that can be actually highlighted by the branch auditor. So he highlighted such aspect. Then we discussed with bank, and we realized that there is a conceptual error by the bank because the product is a peculiar nature. And then that had a bank wide ramification. Bank has updated the Excel macros for that restructuring calculation, and has then circulated to all branch auditors and branches to re-verify that. So this is how why the branch audit is important. Sitting at head office or doing audit of top 20 branches, the statutory branch auditor may not get the whole perspective of the things which are happening at the branch level, and hence branch audit is very important, and that has been constantly conveyed by the institute for the purpose of continuing with branch audits. Of course, there is certain reduction has happened during the current year. I believe the people at the institute must be taking up with the various forum for that purpose. Then third is the closing returns. So what is closing returns? Closing returns, as we all we are aware that CARO 2022 has come out with lot of disclosures in the company audit. Similarly, the RBI has also come out with a presentation and disclosure master direction in 2021 on the related to the banks, and these closing returns are used for the compilation of those disclosures. So whatever, if any incorrect information submitted by the branch in this closing return with their lethargy or their problem in the difficulty in understanding, and if auditor continues with that mistake, then actually the final bank balance sheet disclosures are incorrect, and hence the verification of those closing returns at the ground level is very important. The matching of these closing returns with each other, tallying of these closing returns with the CBS is very important. Hence, these closing returns are not the returns which have been signed by the branch auditors. These are the disclosures. So what care and diligence we take while finalizing the disclosures in a company audit, that kind of a diligence and care should be taken while certifying or finalizing the closing returns for the bank branch audit. Next is report on internal financial controls or financial reporting. Couple of years back, post COVID, RBI has introduced this for the public sector banks, which is already there in the company, in the case of companies, as part of as what we call is internal financial control over financial reporting, IFCO-FR. So there is a technical guide issued by the Institute of Chartered Accountants of India for the purpose of auditing if internal financial controls at the banks, and many banks have already prepared risk control matrices for the purpose of auditing internal financial controls over financial reporting. So these matrices have been shared with the branches. The branches should make these matrices available to you, so you can select certain samples, or whatever sample you select, you should map those RCMs RCMs as part of your checklist. So whatever questions are there in the long form audit report, whatever, when you go through the closing returns, whatever you need to check as part of the closing return certification and IFCO-FR, you should prepare a checklist inclusive all of this. Why institute or we cannot give a ready-made checklist? Because certain closing returns or RCMs would have been different for each bank to bank. So there cannot be a what we can say kind of a ready-made checklist available, but you can prepare a checklist based on the deliverables as part of your regular verification, and based on after completion of once you prepare that checklist, when you select the sample, you can tick down whatever you have checked. So it will help you in whether to complete the closing returns fast, fill up the LFAR, and fill up the and report on the internal financial controls on over financial reporting. So once you decide, say like you can have a column A with serial number, column B with the RCMs checklist point, and from where the checklist points come, so you can mention that regular audit 1 A, B could be the long form audit report, C closing returns, and D could be D will be certification, E report on internal financial controls, and that you can continue and you can map the requirements of these in that checklist. And when you open the advances file, you have to go through all these checklist and just tick over that this is correct or your observation for this, like that, and prepare an Excel file for all advances. And so in one Excel sheet you can have observations for all advances, and then when you have to, like, you have to fill long form audit report, then you can just select that portion of let's say B, and just call it out. Your long form audit report is ready, your annexure for long form audit report is ready. Now what you have to do is you have to do a pasting in the word document, or pasting in the software where this is required. Similarly you can do for closing return, similarly you can do for IFCO FR. So it will ease out your auditing, and it will expedite the audit, since you have to complete audit in 5 days, 6 days, 7 days time. If your checklist is pakka, checklist is readily available, it's just an Excel sheet which you need to provide for. And in the Excel sheet, so what we do typically is that we don't make Excel sheet for each advance verification. We make one Excel sheet, in that it may be running in column. Let's say in A, B, C column you have consumed for the checklist, D column will be the advances which you have prepared, the nature of advance, the security, and the outstanding everything, and then your checklist point starts. Similarly, then next column, E column, will be the next advances, F column will be the third advances which you verify. So you have a sample ready. So tomorrow if anyone come to your office for peer review also, you can say, this is my documentation which is readily available in my Excel sheet. So whatever you want to ask, you can ask this, you go through it, this is my working paper ready. So this will help you. Once you prepare that Excel sheet, it will help you not only for the purpose of auditing, it will also help you in purpose of reporting, as well as to attend the peer review. So we always talk about documentation, and we have made a big issue. What is the documentation? Actually, documentation is what we do, what we write, what we do. So if you prepare this kind of a documentation, it is a readily available documentation. Only thing, for the purpose of peer review applicability, you have to take a printout of it, sign it by the maker, reviewer, and keep it on your record. And every point, since you have already mapped to your report deliverables, it will be easier for you tomorrow. If anyone asks, you can refer it. See from so if a peer reviewer asks and say, see, you have reported this in case of weakness as the internal financial control or financial reporting, so where you have observed it, you can open the checklist, show him, this is my checklist, this is where we have observed in this file. And if I want to take some Xerox copies or evidences, at the end of the file you can have a row, end of the checklist you can have a row where you have taken hard copies, and list down the hard copies which you have taken. If you have scanned it and kept it somewhere in the office, please give a path where you have kept it. So just one Excel sheet for advances will make your life easier for the purpose of documentation and reporting both. So that's why I said that planning consumes 20% of our work. If we do all these things, once we get the offer letter and all those requirements from the branch, then, and if you spend 1 day at the office on working on this, you save 3 days at the bank branch audit on field. So on field you need not focus what needs to be checked or how it should be checked. You can focus on the actual verification, actual field work. That's why the planning is very important, and understanding of deliverables are very important. Now we will move to the subject on the basis of which our fees are decided, that is advances. So advances are bifurcated into two parts: fund based and non-fund based advances. Fund based advances are typically term loans, working capital finance, cash credit, overdraft, bills purchased and discounted, export packing credit. These are pre-shipment and post-shipment. These are fund-based advances. So when I say term loan, it includes all products, all variants which are related to term loan, which may include housing loan, vehicle loan, education loan, gold loan, crop loan, everything which is of nature, which has a tenure and which has installments fixed. And then working capital credit, and also term loan include working capital term loans, and working capital finance includes cash credits, which are against stock statements and book debt statements or receivables. Then overdraft, which can be against the gold, against the property. Then bill purchased, and export packing credits, which are for the purpose of export or export of the good against the export bill discounting. Non-fund based are letter of credit, bank guarantee, letter of comfort, which is now rarely used post Modi, Nirav Modi scam. Then buyer's credit and letter of undertaking. Then what are the important verifications which we need to use is that a master circular on July 1, 2015, loans and advances on statutory audit. There is a master circular on July 1, 2000. Now there is a circular of 1st April 2022 for IRAC. You can refer that, there is some typographical error in this. Then Prudential Framework for Resolution of Stressed Asset, which is of June 2019. Then Credit Policy of the Bank, Procedure Manuals, and Internal Circulars of the bank. So these are certain documents which should be available before you start the bank branch audit. You should go through it, spend half a day on these documents. First two documents are readily available, first three documents on the RBI website. Other three documents are available at the branch only. It is normally on their intranet, so you can spend half a day on these documents, and you can start and you can update the checklist wherever you feel needs to be updated. And if bank branch is cooperative enough to send it on email, you can do it as part of your homework at the office itself. So typical life cycle of advances is sanctioning, documentation, monitoring, review, and repayment. So every stage of this life cycle, we need to verify whether the bank branch has followed the guidelines given by the head office and guidelines of the RBI. Nowadays, what we have observed that in last few years, these all certain kind of advances like retail assets or SME, the banks have started opening a city SME center, what we call, or retail asset processing centers. So with various names, all these documents are getting standardized. And since these documents there is a centralization of all these centralization of these loan products, it is now now the expert or experienced people who have been kept at the these processing centers are carrying out appraisal related and documentation related aspects of loan. In case of SBI, I know that SBI has very nice policy of giving slots to the auditors, so that auditors should go at that point of time to retail asset processing center or SME center and go through the documentation and appraisal which they have carried out. In case of other banks also, you should request, if the documents are not available at the branch, then you should request to get a time for going through such processing center and reviewing the documents. Because even though documents are processed at, or appraisal sanction is processed at that processing center, it is appearing in your sole ID. When it is appearing in your sole ID, that means your true and fair view of those amounts mentioned in that sole ID, you need to disclose, or you need to comment upon as part of audit. And in LFAR also, you need to comment upon the advances which have been parked at your branch. In such scenario, it is very, very important that you actually go through the document and visit the processing centers. If certain bank is saying that no, we will not allow you to visit the processing center, and we will not make you available the appraisal documents or loan documents which it has been entered, it is stored with some agency, so it normally takes around a week to get those documents retrieved, and all those things they are telling about. Please take up the matter with zonal office and your statutory central auditor, and tell them that in non-available document we cannot give opinion on this, and it will lead to a disclaimer of in case of a branch. So these documents should be made available to you, even if they have been processed at the city processing centers or other centers. In certain cases, some banks are allotting the audit of the center to the auditors. So when you are allotting audit of these centers, these are just processing centers, so they don't have any trial balance. In such cases, you have to comment on the internal financial controls in those centers, and for that purpose you need to go through the RCMs for the loan sanctioning, loan documentation, monitoring, etc., and ask them to provide details for or comment of the branch of their processing center on those RCMs. And you also carry out on sample basis certain document verification to reply on those RCMs. So you have the report you should submit is only normally which contains the main audit report, and second is the report on internal financial control over financial reporting. Now, what are the three cardinal principles of lending? First is purpose, other is diversification of risk, and security. These are the three cardinal principles of lending. The first principle, purpose, is for the purpose of which the loan has been given. So, of late, what has happened that there are certain products which have come in the market as a part of loan documentation. We are called what is called as a OD against property, or loan against property, or OD against gold, or loan against gold. Now, what happened in those products is that the whole aspects of this, the focus of these products are on the security which available. So this is against the basic cardinal principle of the lending, that the purpose of the loan is used by the lender to make decision on the basis of which even impact the interest rate is offered. So what I'm trying to tell in this case scenario is that decision on the risk and may even impact the interest rate that is offered. What I'm trying to explain is that, see, someone has taken loan against property for the purpose of house repair, and this is what we commonly see in case of a gold loan against property, or or any other overdraft against property, that is house repair, household use, or loan against FD. Also, many times it is mentioned household use. So FD is not a risky, because FD is with of the bank only, so bank can anytime recover money by actually using that FD and closing that FD. But in case of a property or gold, there is a legal process involved, and you cannot attach property easily. If it is a house, you have to take it is also very difficult to attach that, possess that. So when loan against property or OD against property or gold is given, we have to see that what is going to be the purpose of use of that loan. So whether that loan is going to generate income or it is just a expense. So if you like if someone has taken a gold loan for household purpose, that means that loan is not going to generate income. So from where that person is planning to repay, that is very important while doing a credit appraisal. So purpose is very important, whether it is going to generate income or not. If it is not going to generate income, how the repayment will be done, because invocation of security, possessing a security, that is the last in the whole scheme of thing of the recovery comes. First is follow up with the borrower, that is the first stage. But if your loan, when while giving itself is given with a bad credit appraisal, it is obviously it will go bad afterward, and then you have to make then the bank has to spend more money to actually invoke the security and get the possession. So purpose of the loan, then diversification of risk. So if a branch is there, then how the branch is diversifying its risk, whether it is focused on one product only, or it is focused on one kind of a loan only, or it is a diversified portfolio in its the whole advances. Like when we are doing audit of a bank, we have been allotted a branch which is in the diamond boards, or and which has all customers who are related to the diamond. Now in such case, what happens if the diamond what happened that in 2008, because of the financial recession, diamond industry also went in the bad turn, and all accounts in that bank needs to be restructured because of the recession in the diamond industry. Now what happened that when you generate data for such thing, they realize that that branch manager to call that I don't have to worry because all my accounts are restructured. So we call this branch as a restructured branch. So such things should not happen. Such things happens when a branch is focused on the one kind of a product. So also you as an auditor should carry out a trend analysis. You means we also carry out a trend analysis, that if there is a branch which have been allotted to you, what is the progress of the branch. So from in previous year, the branch has the total portfolio of composition of housing loan, gold loan, business loan and property loan is like 20%, 10%, 30%, 20%. So and other loans are remaining. And now in current year, when you check the portfolio overall has increased substantially, but housing loan has increased from 20% to 22%, and the gold loan has increased suddenly from 10% to 20% of the total branch. Or YOY growth in the gold loan is, let's say, 30%, than as compared to other products is only 10%. If you carry out such analysis, then you come to know that that means the branch has given more gold loan during the year. Then you need to understand whether that in the nature or in the area in which this branch is, whether there is a capacity or there is a potential that so many gold loans could have been issued. Like when we were doing a rural branch, we were also branch auditor at some point of time. It was not like that we have directly become statutory central auditor. So it's a learning at branch audit which help us in actually carrying out a statutory central audit. In a rural branch, when we were carrying out audit, we identified that there is a huge increase in the gold loan portfolio. And when we asked branch manager, he said that this is how we are now. The bank want a priority sector to be increase, so we are giving different kind of concessions on the gold loan. Our gold loan interest is competitive in the area, so we are disbursing a lot of gold loans. And when we realized that, we said that and that branch was not under concurrent audit, and hence we immediately flagged this matter to the HO and requested them that we require more time because of this kind of a different kind of a portfolio increase in this branch. As usual, the zonal office was always saying that no, you have to complete it on time, because it is not possible that we such a small branch, because it's a rural branch, you take more than 4 days, 5 days, and we will not give any extension. But we kept our foot down, put our foot down, and we told them that we will require more time. So we requested, as part of an exceptional basis, on sample basis, we asked our branch manager to call for certain customer and show us the gold. Initially, the matter has been escalated to the zonal level, regional level, because this is something kind of a what we can say, not a kind of a regular requirement by a statutory auditor. But somehow we are not comfortable with such a growth in a rural branch on the gold, because when we are staying there for we could not get a good hotel. We are staying in some kind of at someone's home, which is kind of a guest house or not even a guest house. And we were always wondering that how there can be such an increase of around 15 crores in 1 year in case of in a gold loan portfolio. And when we asked that branch manager, he started ignoring, neglecting us, and not cooperating related to getting the borrowers on board and all those matters. So we discontinued, we suspended that audit, and we told the zonal office that once it is ready, we will come back, because we have to complete other branches also. So in the meantime, we raised our flag, and then we told them that, boss, this is what we are not, we are suspecting some fishy thing here. So we before we go, if you want to carry out as a cluster based audit or something like that in case of that branch. And bank also might have got certain information. So within that 2-3 days, they have actually conducted a quick audit of that branch, and they found that the gold which has been deposited or the gold which is there, certain gold brackets they are not contain the pure gold. Means gold was there, but that is not what has been assessed by the assessor. And then, as based on this, we actually issued a kind of a qualified opinion in this branch, considering and made certain accounts as NPA, passed the MOC. And then we afterward we came to know that this was it was a fraud because of our audit and our persistence. They have actually carried out an investigation at a branch, and then they found that in certain cases borrowers are not available. In certain cases the gold itself is totally fake. So when you carry out audit of such branches, if you get any such off-site branches, please understand the nature of business of that branch. There, once you go there, you will realize what kind of a business could be done in this area. If you speak there where you are staying also, you will come to know that what kind of a business to be done is available in this area. Like in case of a certain branch in Chhattisgarh, it is called Rice Ball of India, and that Chhattisgarh had certain schemes of various banks where they give loan to the rice mills. So when they give loan to the rice mill, we as an auditor need to understand the product, what is the product which has been offered, whether the DP has been calculated is correctly, or whether it is a processing, job processing, or whether it is a actual goods purchase, and it is a unpaid stock which is a paid stock which is available for and offered for the DP. So this way we need to see the credit appraisal, monitoring, processing, which we'll discuss in detail afterward, while carrying out a audit of a bank branch. Then security is a very important aspect. So if a borrower could not pay, the bank has to rely on the security for the recovery. So three cardinal principles we need to keep in mind: purpose, diversification of risk, and security. So now we will move to the actual appraisal process. So next is the repayment capacity versus security, which I have already spoken about, and I will share experience that I was working. We were auditing one of the NBFC, and in our team there was an ex-GM of RBI who used to help us in carrying out audit, and he is a very conservative person, and he used to tell us this, currently ये जो NBFC जो करता है वो मुझे जमता ही नहीं है, ये शेयर्स के अगेंस्ट लोन देता है और उसमें एज पर RBI 50% मार्जिन यू हैव टू कीप, सो इट्स अ लोन अगेंस्ट शेयर्स, दे कीप 50% मार्जिन, बट ये लोग रिकवर कैसे करेगा? आज इतना बड़ा बड़ा शेयर्स के अगेंस्ट लोन देता है, वहाँ प्रमोटर फंडिंग होता है, अगर इतना सारा शेयर प्रमोटर एक साथ मार्केट में लेके आएगा, देन द शेयर प्राइस विल ऑब्वियसली फॉल, and it may fall below below 50% also. So from where they are going to recover? So just relying on the security, how are they only relying on the security, and in what kind of assumption this is that share market will always go up, and even if they invoke the pledge shares of the promoter, the price will not fall. He used to tell at that point of time, I'm talking about 20 years back, that एक बार इन्वोकेशन हो गया प्लेज का, शेयर्स प्लेज का, तो ऑटोमेटिकली ये जब मार्केट में न्यूज आएगा तो सेंटिमेंट से ही वो शेयर नीचे चला जाएगा. And today if you see the disclosure requirement of SEBI, it says how much is pledged with the bank. That needs to be disclosed as part of the LODR, listing obligation and disclosure requirement. So I sometimes feel that what kind of a conservative attitude these our generation before us has always saved us in respect of any kind of a problem in the financial industry sector or banking sector. Today also internationally, Silicon Valley Bank is happening, Credit Suisse is has got merged, Silvergate Bank is got closed, but we have not got that much impact or adverse impact, other than there is a fall in the market, share market, but our banking system is still strong, is because because the RBI takes always a conservative view on the banking system, or about the banks, or about the products which banks are dealing, and not going very aggressive on this. So so repayment capacity is very important. Now when we check repayment capacity, the availability in case of a business loan, for checking repayment capacity is the credit monitoring arrangement report submitted by the bank, submitted to the bank by the borrower. Now always what happens that this credit monitoring arrangement report, practically if we see, the actual is actual what is the audited one, provisional which they submit, now we are in 31st March 22, so they will submit something estimated for the purpose of year 2022, and then projection. So projections are always suffice whatever the criteria required for the purpose of loan. But if you see there is a deviation in the projection as what is the actual and estimated, then we should mention it in the LFAR. Like many times what we see that turnover in the last 2 years have increased by only just 10%, but in the projections on year on year basis, it increased by 20%. 20%. So if there is a history of only increase of 10%, what has changed that it increases on 20% on year basis? So there could be various explanation given by the borrower, by the appraising authority for that purpose, but you need to see whether this is a practical. So we at times we found that it is mentioned that industry will go at 10% year on year in next 4 years, but here he is showing his turnover is increasing by 20%. So what is doing differently than the industry so that his turnover is growing 20% and industry is growing at 10%? So this kind of analysis of CMA which has been submitted to us needs to be verified, needs to be checked. Like a simple, what is how the repayment capacity is determined? Repayment capacity is not profit, or when it is an index balance sheet, it is always a profit, which is again we cannot rely on, means for the purpose of repayment capacity. So what there are a lot of subjectivity comes in that play. So what is the reliable is in the cash flow from the operations. So when in the CMA data we observe that cash flow from operation is negative, cash flow from finance is positive. That means what? He is not generating money from his business, he is generating money from the bankers only and then repaying to the bankers. This is like a Ponzi scheme. You are not you are not generating money in projection from the business, but you are keeping on rotating the funds which you have received from the bankers. So such, if you observe such thing in case of in the CMA report in respect of the projections, if you feel projections are extraordinary or they are they are very aggressive, you need to mention it on the in the LFAR, because you cannot make that account as NPA, or there is no financial adjustment required till the account is regular, unless until there is certain big issues in the account. But these issues where the bank manager or the appraising authority has not sought explanation, or the explanation which they have sought is not adequate to support the projections. As an auditor, we have a very good mechanism for us, very good reporting platform for us, that is the long form audit report. We should always report in that. Also, I request you while carrying out appraisal, so again we are going back to planning, what we as a chartered accountant or as a partner or a senior person in the office is doing, and what articles are supposed to do, that needs to be very clearly bifurcated. So whatever related to appraisal and sanctioning has to be done by us as a partner level, as a senior manager or senior who has experienced person at the level, because article reading appraisal memorandum, he will not come to know, it's just like a novel for him. He will at first year or second year not come to know the repercussion of what is mentioned in the appraisal memorandum. So we may select, let's say in a business loan, top 10 files, so we should spend at least 2 hours, couple of hours on reading appraisal memorandum. So if we spend couple of hours, it is and 10 files, then it is just a 20 hours which we are spending in the total around 48 or 50-60 hours available with us. So please spend those 20 hours on reading, going through the appraisal memorandum. And while you go through the appraisal memorandum, you will come to know lot of discrepancies, divergences in the what is mentioned in the appraisal memorandum, how the account is getting operated. Appraisal memorandum saying that in the previous year there is a turnover of 10 crores, but when you ask and you ask your young chartered accountant or article to go through the Finacle or FlexCube or Banks 24 account in the system, because he can sit beside you and he can go through the system, and you can ask kitna turnover hai account mein, in CC account, he will tell nahi 5 crore turnover hai. Here he is showing that his turnover is 10 crore and the account statement it is 5 crores. How that means he has not routed his turnover from the CC account. That is a clear observation for you, ready-made observation. I will give you another example where we get a normally common discrepancy. Sale will increase YOY in case of a manufacturing concern on 20% basis, but there is no loan or there is no addition in the fixed assets or plant or machinery. if you have to cater the increasing sale, you need to also have increasing property, plant and equipment. So sale is increasing, but you are not increasing the capacity. That means either you have idle capacity currently, or the whatever disclosure is made in the as a turnover, and whatever disclosure whatever he is disclosing as a addition in capacity, fixed asset capacity, is not matching. I will tell you why this is done. You show the increasing sale, you show good cash flow, it gives you the good current ratio for the purpose of cash credit purpose. But if you start showing the proper increasing property, plant and equipment, you have to show a term loan. Once you show a term loan, there will be some amount is going for the installment purpose, and also you have to satisfy DSCR. So at the same time, you have to satisfy DSCR also, debt service coverage ratio, interest service coverage ratio, and current ratio. Now this is a balancing which they could not do. That's why they show that there is a problem. That's why they show there is no buying of any machinery, and but sales are growing. So we need to analyze the CMA data, take it from them in detail. Also, we as some chartered accountants, we also help our client to prepare CMA data. So we are the preparer for that. So we know how this data is normally correctly prepared. And so it is when we also prepare for someone, we know what are the errors is in prepared by anyone else. So we should identify that. So we, if we found something like this, you need to comment it on the comment it in the LFAR. Then there is a calculation is maximum permissible by bank finance. There is a calculation as per RBI guidelines. So we have to check whether that calculation and the projection matches. Then there is a approval from competent authority, waiver from competent authority. So what happens that there is a certain delegation of power has been made to the branch head, certain delegation of power at the zonal head, certain delegation of power at the regional head or regional committees. Now what happens that if they want to have certain concession, then they have to go to the higher committee for giving concession. So like zonal committee has power to give loan up to, let's say, 20 crores or 50 crores, but maximum interest concession which they can give is let's say MCLR plus 3%. Below, if some borrower wants, they have to go to the higher committee. So if a borrower has got 50 crore loan with MCLR below 2%, then you need to check whether there is a approval from the higher competent authority is there or not. If there is no approval, you need to mention that they mention in the LFAR. There is a point in the LFAR whether branch has exceeded its power. You have to mention that yes, branch has exceeded the power. Similarly, there is a the competent authority that time say that this document can be made available after 6 months, or they give deferrals in respect of the post disbursement conditions. So we need to check how the branch is tracking this post disbursement deferrals, and whether the requirement of 6 months or 8 months or whatever requirements are there, whether the branch has adhered to that, and whether they have got the documents. If they have not got the documents, whether they have gone back to the competent authority for extension of time. If they have not gone back to the competent authority, you have to again report in LFAR. Then from appraiser perspective, another important issue is the loan waiver. So when we talk about another issue, is pre-unit visit report. So when we talk about the pre-unit visit report, we need to see whether the branch official has actually visited the manufacturing unit. If it is a manufacturer, if it is a trader, actually his godown, and if he is a contractor, whether he has visited the sites of the contractor. We have carried when we are doing audit of a branch, we observed that it is a loan given to a person, to a contractor who is doing kind of a contracts for the railways. So he has got contracts for constructing a foot over a bridge, or he has got a contract for constructing a kind of a line over the railway tracks, for shifting some utility lines like pipes and all that, all those things, or wires, or constructing shade on the platforms. So he is a regular contractor for railways. So what we observed that in pre-unit visit report, the bank officer has visited his office, and he has mentioned that there is around 5 staff, then there is so many desktops, so many computers, it is a well furnished office and all those things. So we said that, see, you are what about the his what about his percentage of completion, which have you checked? Have you visited the site? What is the stock lying on the go at the at those site? Maybe a top 5 sites or top 3 sites, and how he is assessing the percentage of completion. When you when he will come to in future for the finance, additional finance, are you going to take a certificate, or are you going to carry out a visit of all those places, whether how much work he has completed? So visit, pre-unit visit report and pre-unit visit should be effective to understand, and is required to understand the business of the borrower. So if that visit is not carried out in that with that purpose, that visit report or that visit is useless. And if such visit is carried out, there is a problem with the appraisal itself. So please comment if you find any discrepancy in the pre-unit visit report. Valuation report, I will discuss along with the legal documents, because there is a relationship between that. Then what we need to check is the CIBIL report and network certificate of the borrowers and guarantors. These are very important. The bank has the criteria about the CIBIL reports. So if the CIBIL score as per the credit policy is below this, the loan cannot be given. If it is below, between this to this will be the interest rate. If between this to this will be the interest concession can be given. So and network certificate of the borrowers are very important, even for guarantors. Whether if the loan is going for, let's say, 50 crore and guarantor net worth is only 27 lakh crores, so from where he is going to pay? So similarly, we need to check that whether all guarantors together net worth is at least be equal to the loan exposure, or if we found that at certain places we found that the loan is given to the partnership firm and partners are the guarantor. And when we come to know, when we see the partnership net worth, the partners net worth statement, it is given as the capital in the investment in the this firm to whom loan has been given. Then if that firm has gone bad, what would happen to that investment which he has made? Whatever available is credit side of the capital account also is not of the any use. So please see that net worth is a pure net worth other than his investment in the borrowing unit or borrowing entity, and whether that is adequate if the borrowing entity fails to recover from that. So network certificate needs to be seen from that perspective. Whether the network certificate should be signed or not from CA, that is said. If it is not signed by the chartered accountant, and what the chartered accountant is mentioning while signing it. Normally we all are chartered accountant, we cannot go and check the net worth of the borrower or the individual. We have to understand, we have to rely based on his income tax return balance sheet, what he has shown. If he has prepared the balance sheet, if he has not prepared the balance sheet, we need to see, we have to rely on whatever details is provided by him. It's not an audited net worth certificate, it is based on the reliance. So net worth certificate, one signed by the chartered accountant, needs to be thoroughly examined from the perspective of whether he is really able to bail out the unit in case of a failure by the borrowing unit. Now next is duly filled and complete loan agreement. What we observe that in case of, specifically in case of a thematic loan or schematic loan, what we call typically, like home loans, personal loans, there is a loan booklet available, and various pages mentioned in those booklets, the borrower signature has been taken. It may runs into 15-20 pages also at main in the important pages full signatures, in other pages initials, and the initials are taken on the side also of that loan booklet at various places. So when we go through it, we find that these loan booklets are not fully filled, or they are not complete, or they are not they does not mention the rate of interest and all those things. So when we ask them that it is incomplete, they immediately, that branch head put someone on the job and ask him to fill the details in that, and try to give a immediate compliance. See, it is a what I'm trying to say is, it is a loan agreement. It is an agreement which is under Contracts Act, and hence we as a the bank needs to fully fill, and the borrower also needs to check that whatever he is agreeing, he has been properly filled or not. If the borrower tomorrow goes in court and says that whatever I have signed or initial at that point of time, that is incomplete or the document is not complete, and he would have taken a copy of that agreement, incomplete agreement, it will be very difficult for the bank to prove that he has agreed for the terms which they have mentioned, which includes rate of interest also. So it is very important that all the blank columns in these agreements are filled and agreement is complete in all respect. Second is title search report. When there is a land, building, flats which have been mortgaged with the bank, there should be a title search report is taken from the advocate, who mentions that property is unencumbered and the borrower is the only owner of the property. But at times what we observed that the title search report contains certain kind of observations, qualifications, and the end of that it says that subject to above, the title search report is complete. The borrower is the property is unencumbered and borrower is the only owner of the property or land or building. See, that will not give a clear title to the borrower. That means that is not a clear title to the bank also in future. If title search report contains certain qualifications, then we need to assess whether the bank has cleared that qualification, sought explanation from the borrower, and whether there is a new title search report has been taken without any qualification. If it is not there, we need to comment in the LFAR saying that title search report is not clean and it contains certain kind of qualifications or disclaimers. Also, what happens that when we see the title search report with the valuation report, what we observed that the valuation report says the property is 100 square yards or 100 square meter, whereas the title search report says the property is 90 square yard or 90 square meter. Or in title search report it is mentioned that the land is 100 square yard or meters, but out of this portion is not is under municipal certain restriction, so construction cannot be done or this cannot be sold by the borrower. So if that is the case, then what is the use of the bank such properties, or what is the use of the bank? I will tell you a borrower fit case. In certain cases, there is a DP plan already issued by the municipalities, and there they design that this road will go through this plot. So this much portion of the plot will be taken by the municipality in future. So if and that land, the valuer, while carrying out a valuation, consider the whole plot for the purpose of the valuation, whereas in title search report the and valuer also mentioned that however this much portion is demarcated for the purpose under DP. Title search report also mentioned the same thing, that this much portion is demarcated under DP, and but valuer has given valuation based on the 100 square yard, but actually the as per the municipal records or municipal limitations, the construction can be done only on the 70 square yards. Then in such scenario, the valuation or appraisal should be done on the 70 square yard and not on the 100 square yard. So we need to go through the valuation report and see that whether there are any discrepancies in valuation report, title search report, either overall or with each other, and if such is found, we need to ask the bank whether they have obtained any explanation from the borrower, whether the explanation has been mentioned in the appraisal record, and whether whatever discrepancies are there, whether those have been considered at the time of calculating the security value for the purpose of asset coverage ratio. In case of a immovable property, there is a mortgage deed which has been entered into, whereas in case of a movable property, hypothecation deed has been entered into. So that needs to be, that clarity needs to be done. Then valuation report I have explained. Where the disbursements are done directly to the vendors, then purchase orders, invoice copy should be there. When disbursements are done as part of the reimbursement, I will explain it when we come to the disbursements. Then original title deed should be in possession of the bank, that needs to be checked. Compliance of sanction conditions we need to check. If there is any waiver different, we need to check that. DPN, whether it has been obtained in case of a cash credit accounts, that needs to be checked. Adequate stamping has been done or not, that needs to be checked. Now what happens in case of bank branch audit, the biggest challenge is that we are sitting in Mumbai, we may get some branch which is at Bangalore or some branch which is at Gujarat or in any other neighboring state. In that case, we are acquainted with the stamp duty rules of Maharashtra Stamp Act, but there could be other challenge like that when you are auditing at Karnataka, let's say Belgaum area, it is under Karnataka Stamp Act. If you are auditing something in Vapi, it is under Gujarat Stamp Act. So we are not acquainted with that. So we need to get a circular from bank branch itself that what are the stamp duty rates applicable, and then we need to see that whether if there any legal document verification has been conducted by the empaneled lawyer of the bank or the legal department of the bank, and there they have confirmed that it is that the stamp duty is adequately paid and calculated. So that is important. Then whether charge is created with ROC and other regulatory authority, that needs to be checked. Also whether the charge has been released, that needs to be checked. And this search of ROC should be carried out at the time of every renewal and every review, so that the bank needs to understand what kind of additional charge has been created. That will give you the bank idea that how much additional exposure the borrower has taken. So if he has not disclosed it, maybe in the while providing the financials, but he has already taken additional exposure and the charge has been created on that, they can ask explanation from the borrower that, see, you have not disclosed us that you have mortgaged your property or taken additional loan from this institution, but it is appearing in the ROC search report. Kindly give explanation for that. So ROC search report come handy in such scenario. Second is creation of registration charges. So records of all equitable mortgages obtained even by non-SARFAESI notified banks or banking institutions, including NBFCs, with the SARSAI. See, from our experience, we realize that delay in the registration of SARSAI can put a bank at risk. In one of the I came to know while going through one of the internal report of a bank is that the bank has given loan to one party, and they have mortgaged his property. What happened that and they have created SARSAI immediately, and when they carried out a SARSAI, and what happens after a certain point of time, when they got a letter from a NBFC saying that there is a double mortgage on this property, and the property is already mortgaged with us, and how you have created a SARSAI charge in it. So when the bank kind of carried out a record search and everything, and then when they exchange letters with NBFCs, they realize that the borrower has already taken a loan from the NBFC before mortgaging the property to the bank. So it is a clear case of fraud. And then bank asked them that how we can create a charge in the SARSAI records when you have already given loan. So the NBFC told that there was a problem, there was a delay from our side in creating SARSAI charge, and so it was not created, and because of that bank could give loan. Now what is happening is that there is a legal battle happening between the bank and NBFC, that who has the right over the property for the recovery purpose, and the borrower is enjoying all that battle. So to see that, to avoid such kind of a situation, SARSAI charge should be created immediately on the property, Similarly, ROC registration should be done immediately, charge should be created immediately, so that such legal issues will not happen in future. Now we will come to the disbursements. So whether it is a direct disbursement to the vendor, we need to check. Whether it is a reimbursement, we need to check. Whether adequate margin has been given by the borrower from his own account need to be checked. I will give you an example. Education loan has been given. As part of the education loan sanction terms, 80% will be given by the bank, 20% education for abroad, 20% should be deposited for remittance to US. So what borrower has done? Borrower has taken education loan from X branch. Borrower has gone to the other branch, has placed his gold ornaments and taken loan and shown it as a margin. In the purpose he has mentioned house repair, but actually transferred to his saving bank account and given it to the same other branch of the same bank as margin. So this clearly shows the diversion of funds. So a margin needs to be given from your own account. Now that borrower was not smart enough to go to other bank and take a gold loan and then show it as a margin. This bank would not have come to know that. But since borrower has done from the same bank, the bank could identify that he has not used his own sources. So what is request is that whether margin obtained from own sources needs to be checked. When it is a reimbursement, all details related to reimbursement should be there, all invoices should be there, all debit entries in the borrower's account should be seen, whether it has gone to that vendor only, and then only the branch should have disbursed that amount as a reimbursement. If it is directly given to the vendor, there should be a clear RTGS instruction to debit it to the to transfer it to the vendor by the borrower, because it is the borrower funds, and you should have a receipt from the vendor in respect of that receipt of RTGS. Then disbursement should not be done from compliance with pre-disbursement conditions. Then all charges, processing fees, stamping, insurance should be taken. That should be checked. Then interest or charges on advances or temporary over limit needs to be verified. Now all this you verify in the document. Now the most important thing is how the account has been opened. So I will account needs to be opened correctly as per the sanction term. Let's say the sanction term is about a housing loan product X, then account needs to be open as a housing loan product X. It cannot be open as a housing loan product Y. Whether the branch has actually opened the account in correct products code, correct scheme code, whether the correct interest has been charged, that needs to be seen. Now we talk about maker checker everything, but no software allows any entry in the system without maker checker. So if there is an error, maker checker control has failed. This is a clear you are reporting in your RCMs for internal financial controls or financial reporting. Whatever errors you find in the system entry, that there is a failure of maker checker controls. So like in case of a stock statement, if stock statement doesn't receive within 10 days after the post end of the month, 10 penal interest should be charged. Now penal interest should be charged. For that purpose, the flag of penal interest should be on, and when you go through the stock statement, you see that you go to the bank statement, you see that stock statement is received with delay, but penal interest is not charged. That means the flag for penal interest is not made on or not made yes. So this is a error on the bank side while creating a master. It may happen that when you go through the stock bank statement for last 12 months, first 6 months, no penal interest is charged. After that, penal interest has started charging. That means the branch has identified it and they have made their flag yes. But whether they have collected penal interest for the previous 6 months when it was flag was no, that you need to check. And if you found that they have not collected, it should be reported as a revenue leakage. So master creation is very important You can take a screenshot of the master which has been created and actually ask someone to tick with the sanction letter, map it with the sanction letter. That will give you the idea that master has been created correctly. Now there are certain issues related to master is that which we come to know, which are very difficult to handle at branch or branch level, is that if someone modify the master during the audit, means what, uh, till 31st March the penal interest flag was no. The branch head knows that auditor will come and check whether master has been created correctly. For that month he make that flag as yes. Then when we check the master, it is correct. But what is the detective control for this? Is that you need to go through the bank statement on sample basis and check that whether at the end of the every month penal interest has been charged or not. So like that, for master creation, when we check actual master, we also need to apply certain detective checks, so that we need to come to know whether the masters have been created correctly or not. Then after doing sanctioning, disbursement, everything, the next important area which we need to look into is whether is operations and monitoring. So it's like what we normally call is, till disbursement it is like a marriage, and post disbursement it is like a married life. So first 6 months are always a honeymoon period, then the real married life starts. So like that, the real problem or real starts brewing or come to surface after 6 months, while operations and monitoring where operations and monitoring needs to be checked. So transactions which are susceptible to fraud to be directly reported to RBI, that is a requirement of your appointment letter also. What we need to check as part of operations and monitoring in case of a cash credit account is the turnover in the account. So whether the turnover commensurate with the actual turnover of the borrower. So if turnover in the, and it's both ways, if the turnover in the account is 10 crores but actual turnover of the borrower in last year is 50 crores, that means he has not routed all turnover through the bank. That means he is operating as a current account or cash credit account in some other bank. That needs to be checked why is not routing, because cash credit is given based on the working capital gap, so it's supposed to route all turnover from the bank. So we need to check why he has not routed it from the bank. Then turnover in the account, then similarly, if the turnover of actual turnover is 10 crores but you find that the turnover in the account is 100 crores, which is very rare, so we need to investigate it. Then transfer to group company. The banks or NBFCs are all now very particular about any group transactions. So there could be a transfer to group companies. So we need to check whether there is a transfer to group company. If it is yes, then whether the transfers have been made at arm's length, whether bank has carried out taken a declaration or from the borrower, whether the transfer have been at arm's length, and what is the purpose of the transfer, that needs to be clearly asked by the bank to the borrower, that what is the purpose of the transfer. So transfers cannot be done just because of the group company wants is short of funds, so the transfer has been done. That cannot be the case. The transfer needs to be based on the business transactions. The loan cannot be given from the borrowed funds to the group company, and the business transaction should be genuine, and there should be adequate explanation and evidences on sample basis should be provided by the borrower for the purpose of transfer to the group company. Then timely receipt of stock and book statement is important for the DP calculation. If a borrower is constantly delaying the stock and book statement, that means there is some problem with the borrower in having either his housekeeping is not good or there is some problem. Then there is a very important aspect of the DP calculations, that every borrower is submitting stock statement on timely basis, but the debtors which is showing on below 90 days are continuously same. So and the amount is also same. So if it's showing 100 over last 6 months, that means there is no movement in debtor, or the movement is such that is exactly what is there in the previous month. So when you find such kind of a thing in in case of a receivable where continuous debtors are shown, that needs to be verified. That should be checked with the stock audit if it is conducted. When stock audit, whether stock audit has given that confirm that genuineness, or you should ask the branch whether what kind of explanation they have sought from the borrower. If the branch has not sought any explanation, then the same should be reported in LFAR. Then timely. Then second is the non-moving stock. We observe that any time non-moving stock or unpaid stock is not removed from the balance sheet, removed from the stock statement, that needs to be checked that whether the non-moving stock or unpaid stock is removed. Then what happens that in case of unpaid, when we calculate the stock under LC, stock under packing credits are not reduced from the actual inventory to calculate the available stock. So if stock under LC, that means it is already pledged with some bank. Stock under packing credit is already pledged or already hypothecated with some bank. Then in that case, then loan cannot be given. Otherwise, it will tend to double financing. So it should be reduced while calculating the DP. Periodic unit visits and stock audit should be conducted wherever required. If unit visit not conducted, kindly report it. If you find that there is a deliberate attempt to delay unit visit or stock audit by the borrower, the same should be specifically reported by the branch auditor in LFAR. And like how you will come to know the stock audit and unit visit deliberately delayed, if it is not conducted and there is a constant communication by the bank to the borrower about the same, and borrower is delaying it for X or Y or Z reason continuously, then that is a red flagging. That is an early warning. There is some problem with the borrower account, and hence it will be reported. Review of audited financial statements needs to be thoroughly carried out, because it will give, whatever provisional years or estimated years submitted in the previous year needs to be checked for the audited one in the current year. So if there is a lot of deviation in that, it should be immediately flagged in the LFAR. If the audited financial statements and stock statements are not matching, what we observe that stock statements are taken of 29th March and audited financial 31st March, and there is a discrepancy in stock, the same should be reported. So that for that purpose, audited financial statement and stock statement needs to be properly reviewed by the auditor. And there is a next is a letter of acknowledgement of debt and security should be obtained every 3 years, so that the borrowing facility does not go time bar. Ahujaji, can we take a break for 5 minutes here?
Yes sir, no worries.
Okay, so we will take a break, and then within 5 minutes I will come back, and then we can have queries. Otherwise, I will continue with the future session.
Okay sir, done. Thank you.
Okay. So we have completed operations and monitoring. Now we will move to the next slide. There is a RBI circular which is on master direction on frauds. In that circular, RBI has given around 43 early warning signals. The genesis of that circular is that based on certain study conducted by the RBI, it has identified this the NPA accounts or fraudulent account which shows early warning signal, and those early warning signals are identified or caught at the right time. Then it could be that account could be that fraud could be identified at the early stage and either could be avoided or the repayment should have been asked for. So based on that, there are 43 early warning signals have been defined by the RBI, and this circular is available online on RBI website. I request everyone to go through it. It gives certain signals which are what we call as a objectively can be put by the system by the bank, and certain are subjective. The banks at central level has developed certain software or installed certain software which identifies these early warning signals, and then these early warning signals are sent to the branches, and the branches are supposed to give short explanation about this the same from the borrower, and if the explanations doesn't sound satisfactory, then the team or the committee at the zonal level or regional level or at HO level, depending on the size of the borrowing, decide to mark that account as an RFA, that is called red flag account. And post red flag account marking, the bank need to conduct a forensic or investigative audit, and after conducting that investigation, if that account is found to be fraudulent, the fraud needs to be declared. Now, in the whole this on this background, the role of branch auditor is very important. There is a possibility that certain early warning signals have not been identified by the bank, or the branch has not given correct explanation to the borrower, to the head office or to the regional office about the borrower, and because of that they might have not mark that account as RFA, and because of that the whole process has not started. So what as an auditor we need to do at the branch level is that whatever early warning signals have been identified and communicated to the branch, the branch should, what kind of explanation branch has obtained from the borrower, that needs to be seen, whether that explanation has been correctly communicated from the branch to the HO or ZO or the department at the central office, or there is some kind of a lacuna in the communication from the branch side. That if you find such kind of a lacuna from the branch side, that needs to be communicated, that needs to be reported in LFAR, and if you find that because of that the account would not have been marked as RFA, kindly immediately write it to your statutory central auditor through email, and with your whole note or brief detailed about that account. It may identify that the explanation provided at that point of time by the borrower and by the branch is correct, and you may not have doubt in that explanation, but while reviewing the account you find that explanation provided by the borrower is not in line with what is the account it's showing. Like in certain cases, let's say funds coming from other banks to liquidate the outstanding loan amount. In that case, he has said that I have a loan in XYZ bank, or I am operating from XYZ bank because of the because that bank provided me a good service in respect of the payment of tax, good services in respect of the cash management system, or collection as a collection agent from my other debtors, and that's why I am operating a current account with that bank, and term loan with your bank so whatever received from that bank is I am paying here for repayment of the term loan. Or and so this is not a early warning signal typically, but when you go through the file of the borrower, you find that the borrower business is not that great, so that he will able to liquidate the facility or repay the installment on time. That means either he is taking loan from other bank and paying here, or he is like kind of a once that account moves to SMA 0, SMA 1 or SMA 2. These are the buckets which are defined. 0 to 30 overdue is SMA 0, 31 to 60 overdue is SMA 2, and 61 to 90 is SMA 3. So SMA 0, 1, 2, then SMA 2, not SMA 3, SMA 2. Then in that scenario, once the account is going near SMA 2 and going to shift to NPA, he gets some fund arranged and pay to the bank. So that means that his business is not running properly, but he is taking loan for temporary purpose to maintain the account as standard. That is and when you realize this from his while reading, going through the file, and when you see the trend in the account, you should immediately say that the closure of this unknown signal based on the explanation is not correct. there has to be there is some problem in the account, and you should immediately mention in the LFAR that this early warning signal is there, so that bank when it goes in future, when that LFAR is getting escalated at the central level, when the branch auditor will go through, statutory auditor will go through the LFAR, immediately escalate it to the respective department and ask them to thoroughly verify it or mark that account as RFA. So this is what I'm coming back to, that branch auditors play a very important role in all the aspect of the branch audit. And though early warning signal is a circular which is issued by RBI, the always what happens that the branch or branch manager or branch official posts that नहीं ये तो सब HO में होता है, ये तो system करता है, ये HO में होता है, what kind of thing. But HO what HO does is just is based on the explanation provided by the branch management. So if the explanation provided by branch manager is incorrect or is in not line with the how the account operates, that means the explanation that means the whatever done as HO is not correct. So it is very important that these early warning signals have been addressed, and the branch auditor should see that the system or process of early warning signals and red flagging or the branch regulation for that purpose have been correctly has been followed by the branch management. And certain early warning signals are also important from our audit perspective, which we can see is like default in payment to the banks or sundry debtors and other statutory bodies, bouncing of the checks, high value checks. So this we come to know when we go through the bank statement. So this could be the point of the checklist also for you people, for us as a branch audit. Then underinsured or overinsured inventory. Why someone is overinsuring the inventory? That means he is having more inventory but not disclosing to the bank. That means he is using bank facility, but he has his own funds also, but still he is using bank facility. Then dispute of title of the collateral security, which we may come to know from the reading of the account. Then delays observed in payment of outstanding dues. I will explain that how the people or at the branch or the borrower level are trying to manage this whole NPA. Since now the NPAs are system based and automated, now what happens that anything which goes above 90 days immediately get marked as NPA. Now as per the RBI guidelines, all banks have to automate the NPA process. So objectivity, most of the cases objectivity has been to the 90% of the level has been now come in the NPA, so that anything which crosses 90 days becomes NPA. Now the bigger problem in this case is that how they keep these accounts below 90 days. Now when you carry out an audit, you need to verify that how the repayments are coming. So it should not only the way where we should see repayment aa raha hai, overdue nahi hai. Problem is that what you should do, you should take sample of overdues for various days. Now the NP is marked on the daily basis. So anything goes beyond 90 days on daily basis needs to be marked as NPA on that day itself, and should not wait for the month end or quarter end. So when there is a daily marking of NPA, all accounts which are above 90 days should be marked as NPA on daily basis. Now how the borrowers are or the branch managers are playing with this criteria is that on the 89th day or 88th day they will try to arrange the fund from someone and from somewhere and credit that account, show it as a standard and move ahead. In one of the branches where we used to do concurrent audit, we observed that an account is constantly overdue, but bank is not marking it as NPA. So, and it is constantly coming in our report for every month as a qualification. So what happened in the end of that is the one of the large branch, one of the branch under statutory central audit. What we found, what has happened that on 15th March the or 20th March the branch audit manager has come and told us कि बॉस अभी तुम लोग तुम्हारा कंकड़ डिसकंटिन्यू कर लो. हमारा ब्रांच रिसेंट ऑडिटर के पास है, वो तो 25 तारीख से ही आ जाएगा यहाँ पे, एंड ही हैज़ टू डू 3 ब्रांचेस. वो हमारे ब्रांच करेगा, देन अदर ब्रांच ही विल डू. दैट्स व्हाट ही हैज़ कम्युनिकेटेड. तो मेरे पास स्पेस नहीं है बैठने के लिए, मेरे पास पीसी नहीं है उनको देने के लिए, तो मैं आपका ही स्पेस और पीसी यूज़ करूँगा. तो प्लीज़ go ahead and please don't come to the branch for next 15 days, 20 days. So as a part of our contract with the internal inspection department, we have to submit every report by 10th of April, 10th of the next month. So we communicated the same to the inspection department. Somehow they managed with the inspection department, and inspection department said, okay, you come after 15th April. Then what happened that we discontinued the branch, we started our branch audits, and after after 15th April we went back to that branch, and we saw that the branch statutory central auditor has not made that account as NPA because that account was within limit on 31st March. So we were wondering how this has happened. So when we dig that account, we observed that on 28th March there was a credit in the account from the customer of the same branch, and on 10th April there is a debit in the account, and that same money amount has been transferred to the other back to that account. This is clear case of evergreening, what we call. So we ask for the sample, ask for the voucher, because when you are debiting a customer account, there has to be a transfer request from the customer from whose account you are debiting, and they could not produce that voucher at that point of time. And fortunately that branch was not signed because he was SCA, so he told I will sign the branch after all I complete other branches, because he's a Mumbai based SCA, so he was traveling at that point of time, so he has not signed the branch. And then we observed that on the 10th April that money went back after he left the branch. So I know that branch statutory central auditor. I called him, I told him that this is what we have observed, and you need to revisit this branch again, because this is not a, and we are classifying as a concurrent auditor that account as NPA. This is not a practice which is this is a very bad practice which bank and branch is doing. So he got alarmed. He came immediately to the bank on the next day. I had a meeting with him. I showed him everything. Then he agreed that account should be classified as NPA, and he has marked as account as NPA. So there you need to see the transactions in all overdue account. You take a trend of you go through the concurrent reports. You take a trend of overdue accounts, and you see that how these accounts have been regularized after these accounts have been overdue or overdrawn. That is very important. That just getting out of overdue is not important. How it has got out of overdue, that is important. That's where the funds coming from other banks, delay observed in payment of outstanding dues. This actually comes in picture. This is one thing which I already told. Request received from the borrower to postpone the inspection. That is on flimsy reason. That is one of the early warning signal. So this is also could be the part of the checklist which we will prepare. Financing the unit far away from the branch. This is what we observe in case of rural branches. Unit is another 50 kilometers away, but it has been financed by this branch. So how the branch is going to monitor that unit on a regular basis. Then frequent invocation of BGs and revolvement of LCs, that needs to be verified. Also this will be reported as part of a LFAR by the branch auditors, because that is one of the specific requirement of LFAR. Also how the account and CC account can be overgrain is that CC account is constantly overdue, then the branch and the branch manager has normally 10% power for ad hoc sanction. So there is a request from the borrower, and the branch manager sanctions the ad hoc limit up to 10% and brought that account in overdue, but this ad hoc limit is for 90 days. So if he sanctions for ad hoc limit cannot be for 90 days. If he sanctions for in 28 Feb, the account gets out of the NPA on let's say 30th April, but on 31st March, and then ad hoc limits gets cancelled on 30th April, again that account is overdue. The problem is that we need to see whether the branch manager has authority to sanction the audit limit, what is the day up to which he can sanction the ad hoc limits, and if the ad hoc limit is sanctioned at the fag end of the financial year, to just regularize the account, or before completing the 90 days to just regularize the account. That account should be marked as NPA, MOC should be passed, and any financial adjustments which we as branch auditor should do should be through MOC only. Just mention in LFAR cannot be adequate, it has to be passed through MOC. Once you say you have to pass MOC, the cooperation level of branch will either reduce or it will increase substantially. Both way it can go, it may happen. But you should say that this is the material amount. Then I have also observed that branch managers are saying कि कैसे है ना सर, आपका एक्सपेंस भी इंक्रीज़ हो रहा है और यहाँ पे इनकम भी इंक्रीज़ हो रहा है, तो दोनों का मिला के नेट इफेक्ट मेरे प्रॉफिट पे क्या होगा, 10,000 से कम है, आप एमओसी मत इशू करो. सी दैट कैन नॉट बी, दे आर नॉट अकाउंटेंट्स, वी आर अकाउंटेंट्स, वी नो व्हाट इज द डिफरेंस बिटवीन द एक्सपेंस इंक्रीज एंड इनकम इंक्रीज. सो you should say that no, these are two different transactions, so I have to pass MOC, and please pass the MOC. Don't get carried away with any kind of explanation given by the RO, ZO, threatening, and also next time आपको बड़ा ब्रांच दे दूंगा वगैरह. MOC अगर required है तो पास कर लो. The second thing which we need to look into as a statutory branch auditor is that one more thing is that nowadays there is a concept which is called as interchangeability of the limit. So what is interchangeability of the limit? A CC limit is sanctioned, it is, let's say, of 10 crores, and LC limit is additionally sanctioned, which is of 5 crores. The assessment done for the both LC and CC are different, and what happens that CC limit is getting overdrawn and it has reached to a stage where that if it crosses 90 days it will become NPA. Suddenly things moves fast in the branch and they decide to avail that interchangeability criteria and say that LC limit as per the sanction up to 2 crores can be interchangeability available for the CC limit. So the branch immediately get a sanction from the competent authority and increase the CC limit from 10 crores to 12 crores, reduce the LC limit from 5 crores to 3 crores. If the LC limit is unutilized, he can do it, so he does it. But you need to see whether there is a real requirement for interchangeability. What is the basis of the request by the borrower for interchangeability? अगर आपका नॉर्मल रिक्वेस्ट क्या हो सकता है कि मुझे क्रेडिटर्स में आई वांट टू पाइल अप माय स्टॉक, ओके, बिकॉज मुझे आगे जाके बहुत सारा आई हैव गॉट ऑर्डर्स इन हैंड and for manufacturing or for the execution of those orders I need to have stock, and so please and if I give advance to the parties I will get better price. This could be one of the explanation by the borrower, or other explanation is that my debtors are getting delayed little bit, so kindly give me for a certain period this interchangeability allow me, so I can that working over that I can match. Instead of 60 days the debtors will be paid by 90 days, and DP also allows up to 90 days, but in the meantime I have to run my business, so kindly allow this interchangeability. So this could be the genuine reason. See the genuineness of these reasons which have been provided by the borrower before saying the interchangeability. The and why he had suddenly wake up and when on 75th day or 80th day or 85th day to request for the intelligibility? Why he has no, if he is facing a problem, he's facing from last 2 months, why at that point of time he said that please give me intelligibility? That means he tried to enjoy the cash credit limit, overdrawn cash credit limit, and also try to keep the buffer of LC limit, which is a non-fund based limit. So this way they can evergreen the accounts by actually on flimsy reason they can invoke intangibility, increase the cash credit limit, reduce the LC limit, and actually fool the whole banking, fool the whole automated system of the IRAC. So if you find that intangibility is allowed at the fag end of the account becoming NPA, please mark that account in NPA. There is no second thought. If the reasons are not genuine, if it is the reasons are flimsy, please, my request is that don't give any second thought. Please mark that account as NPA. And it should be done through MOC. Wherever you need to give effect of that MOC, you give effect whether on capital adequacy, whether on provisioning. And if you find that this is a frequently happening in that branch, this is happening with various borrowers on regular basis, please write a letter directly to statutory central auditors through email giving your observations. This matter will be taken care. I am telling you, we are statutory auditor. If we get certain kind of a letter after you complete your branch audit, we ask them to include that branch under a special audit or investigation, and such matters should be deliberated strictly. What I have experienced as a statutory central auditor, there are certain accounts which are very small from the perspective of a bank as a whole, but they are big or material from the perspective of the branch. So when we come out with this kind of issues and we present it to the top management, they get irritated with what their branches are doing at the ground level, or the zones or region are doing at the ground level. They always say that 25 crore account is why, if it becomes NPA for a bank like State Bank of India, it doesn't make any difference. हमारे लोग ऐसा क्यों करते हैं? वो तो उसका ब्रांच का रिकॉर्ड बचाने के लिए करते हैं. बट इसका क्या होता है ना, this impression gets carried to the RBI and creates bad impression for the bank. So this top management may not be very interested in saving such accounts which are of small nature and which are showing constant problem. But branch is trying to show their performance. That is why it is happening. Now अभी क्या होता है, जैसे 25 करोड़ का अकाउंट NPA हो गया. If you are doing audit of State Bank of India, ब्रांच बोलता है सर ये कहाँ मटेरियल है, हमारा कितने का टोटल पोर्टफोलियो 18 लाख करोड़ का, 25 करोड़ कहाँ जाएगा, ये तो इमटेरियल है, आप क्यों देख रहे हो इसमें, अभी इसके लिए कहाँ एमओसी दोगे, 25 करोड़ का अकाउंट आप NPA भी कर दोगे तो कितना सब्सिडेंट में प्रोविजन आएगा, 15% उसके ऊपर आएगा. तो 15% कितना होता है सर, इट्स जस्ट मियर 5 करोड़, नॉट इवन 5 करोड़. तो आप क्यों ये सब कर रहे हो, इट इज़ अराउंड 3 करोड़ कुछ अमाउंट आएगा, 3.5 करोड़ बैंक स्टेट बैंक ऑफ इंडिया के प्रॉफिट के लिए 3.5 करोड़ कहाँ जाता है. सो ऑल दिस थिंग्स विल कम इन पिक्चर. Please, my request is that don't get carried away with all these matters. For you as an auditor, bank branch is an unit and materiality should be tested on the size of the bank branch which has been allotted to you, not on the bank side. So any observations related to that bank branch, if it is material for the bank branch unit, then then you should pass MOC, you should carry out financial, you should report it. Don't get carried away with what branch management is saying. So these are something aspect which I already discussed as part of a renewal of review and renewal of fees. Repayment I have already discussed. Now we will go to the bill discounting. As part of a bill discounting process, the very important thing is that you should check it with a view that you should able to see that these bills are not discounted by the group parties and it is not accommodation bills. In one of the bank branch, what we observed that the bills have been discounted, and with it there is a proper limit has been sanctioned for the discounting of the limit of the bills. As you know, as you might be aware, there are various branches at the 4 areas: commercial banks and where commercial banks and even cooperative banks, where it is a market for the bill discounting. So what happens that now there is a platform which is a a similar platform to the Swift, under which this whole LCs have been domestic LCs have been issued, and those should be SFMS platform, what they call, and those domestic on that platform only LCs should be issued domestically. Now what happens that what we observed that there is a factory of this two people at Wada, and both are in the same business. They used to actually issue bill by one person bills against each other at most of the time, and those bills are getting discounted by various banks. So one of the banks which are doing have the limit for bill discounting. So we observe a lot of discrepancies in that there was no lorry receipt. Both are in the same business, but there are frequent transactions of purchase and sale from these parties, and all these transactions where bills are getting discounted with each other. When we observe that these both are related parties, group entity, but does not get disclosed as a group entity. एंड व्हेन वी सॉर्ट फॉर एक्सप्लेनेशन दे सेड दैट वो लॉरी रिसिट की ज़रूरत नहीं है, बिकॉज वो जो हम लोग ट्रांसफ़र करते हैं वो फैक्ट्री नियर बाय है, तो वो हमारा जो व्हीकल है उससे ये गुड्स ट्रांसफ़र होते हैं. ये कोई ऐसे बड़े गुड्स नहीं है, ये दीज आर स्पेयर पार्ट्स विच वी सप्लाई टू वेरियस पार्टीज. देन वी आस्किंग वाई देर इज़ अ फ्रिक्वेंट परचेस सेल. नहीं, वो तो नॉर्मल प्रैक्टिस है ना बिज़नेस का. जिसका जो कस्टमर है वो अगर कुछ पूछता है, उसके पास नहीं होता है, तो वो मेरे से लेके देता है. मेरे पास कस्टमर है, मेरे पास वो माल अवेलेबल नहीं है, मैं उससे लेता हूँ. Then we ask, we told bank to ask why it is not supported by your turnover which you are showing in the business, and that this kind of a business you are doing with other. Why it has been not disclosed as a group party? Why it is not disclosed in the related party transaction? When we started questioning as part of our audit all these problems, then slowly what we observed that the questions or answers which have been provided by the branch, their intensity, their fighting spirit has gone down, and we then finally the branch had said that there is some problem with these bills. There could be some accommodation kind of a thing happening in these bills. So ये इसमें तो आप LFAR में लिख दो, पर आप इसका एमओ से कुछ पास मत करो. So I told them that, see, if you regularize this account, the account is not regularized yet, but you have certain time, so I am not passing an MOC, but I will specifically mention in my LFAR that these kind of transactions are taking place, and this should be closely monitored. And I have also reported it to SCA separately about these kind of transactions. So whenever you come across bill discounting, local bill discounting, inland bill discounting, please see that there is no accommodation angle to it. Even in case of what we call as a export bill discounting, please see that export bill discounting is not just based on the high sea sales kind of transactions, whether there is a proper documentation available, whether the charges which need to be collected have been collected properly, whether in case of a bill for collection, whether all bill of lading are with the branch, because it should not happen that branch is parting with the ownership of bill of lading to the customer, and customer is buying withdrawing goods from the port based on that bill of lading and without paying to the third party. So this kind of वेरिफिकेशन needs to be done in bill discounting. अदरवाइज क्या होता है ना, बिल डिस्काउंटिंग हम लोग कैश क्रेडिट देखते हैं, टर्म लोन्स देखते हैं, उसका रीपेमेंट वगैरह सब कुछ देखते हैं प्रॉपरली, बट ये जो थोड़ा सा बिल डिस्काउंटिंग पोर्टफोलियो है वो कभी कभी छूट जाता है. सो अगर वो एक्सपोर्ट है तो फिर भी वो हम लोग देखते हैं, बिकॉज उसका बड़ा अमाउंट होता है पैकिंग क्रेडिट वगैरह का, तो वो देख लेते हैं. बट ये जो फाइनर एस्पेक्ट है ऑफ द inland bill discounting, sometimes we miss out. So my request is that whenever you come across bill discounting, whether export or inland, kindly go through it, kindly check it on sample basis, identify the parties which are doing regular bill discounting, and select the sample accordingly. Sample selection in all this on the whole planning is whole of bank audit will be very important. So it can be just a drop down menu, drop down in the filter by top 10. You need to select a sample on ABC criteria. So large all accounts maybe you may select, but small accounts also you should select, because as per the RBI guidelines, whatever above 10 crores or 10% of the bank branch advances, fund based plus non fund based, you have to comment on. For below this threshold, you have to comment on the process. So when you are doing housing loans, vehicle loans, personal loans, in that case you have to comment more on the process, the way these things are monitored. But when you are doing large accounts, you have to actually comment on the discrepancies. So kindly go thoroughly check these accounts which are 10% of the total of the branch advances, fund base plus non-fund base. And you have to, if there are 10-15 accounts, then you have to spend some 20 hours on those accounts, not more. You have got 48 hours to do other things, 48 hours totally. So when I'm saying 48 hours, you have got, let's say 48 or 60, you have got 4-5 days. And we know that branch audit, the way we work, we have to work for 12 hours a day. Then only you will be able to complete a branch audit in time. Then non-fund based LC arrangements. So in respect of LC arrangement, we have to check whether there is a limit has been given by the competent authority, what are the sanction terms by the competent authority, then LC application by the buyer, pro forma invoice whether they has got, then license whether it is under restricted category, whether it is a FOB or CIF, based on that the insurance requirement. In case of LCs more than 300,000 USD, then whether the due diligence report is available, credit report is available, and all FEMA related compliances, whether it has been done or not. If you go through the guidance note, it is in detail it is mentioned. There is also RBI circular on co-acceptances. So if you go through that circular, you will be able to identify the regulatory requirements. Also, in case of a packing credit, what we have observed is that every pre-shipment credit has to be liquidated by giving a post-shipment credit. So normally how the transaction happens in case of a pre-shipment credit is that there is a purchase order received from the party, from the outside party with the outside buyer, and against that the pre-shipment credit is given. And there are two kind of a pre-shipment, pre-shipment, post-shipment exposures are given. One is on the running account basis, other is on the bill-to-bill basis. So when pre-shipment credit is given, when the pre-shipment credit is given on the running account basis, in that case you may not able to identify it on bill-to-bill basis, but the credit which are coming in these accounts should be from the export realization only, and that is by either discounting or by either collection. So typically what happens that on the basis of purchase order, the disbursement is made based on the foreign currency or in the local currency, and after that after the period or 2 months or whatever the production cycle is there, the goods are exported to the exported to the buyer. And that point of time, either it will be on the collection basis or on the discounting basis. So if it is exported on the collection basis, immediately the bank will receive the funds after the goods have been reached to the port of the destination port, and based on that the pre-shipment credit should be liquidated. If it is based on the post-shipment or discounting basis, and if it is normally it is based on the letter of credit from the importer's bank, and in that case on the date of the due date of the bill, in that case the disbursement made immediately after export, so pre-shipment gets converted to the post-shipment, and on the due date the money is received. If the money is not received, LC is involved. So if there is something, if you observe like a high C sale, there is a trigger you need to see. Similarly, for the import from outside the country, the finance is done in the foreign currency, and in that case also there should not be something like a pre-shipment. Also at some point what we observed is that in case of a normal imports also, the LCs have been issued with conditions that it should not be a charter kind of a charter import and charter bill of lading. What is charter bill of lading is that the whole ship has been hired by the importer and hired by the exporter outside India, and he sends the goods here on the charter basis. So like see, there are various entities like Mercs and all that, those are actually shipping agent. So what happens that if the on the charter basis the ship has been hired by the exporter outside India, then the risk lies with the exporter. So if it is on the FOB basis, if it is on the CI basis, the risk lies with the importer. So if something happened to the importer, happened to the ship, then the whole risk lying on the importer only. So in such scenario, if it is specifically mentioned in the LC that it should not be a charter LC, charter shipping, then bill of lading should not contain is related to charter, then you should see if still branch allows that kind of LC for the charter shipping or charter bill of lading, then it is beyond the branch power. In the LFAR there is a specific point that whether branch has allowed any transaction beyond the delegated authority, you should mention it there specifically. In NFB, BGs are issued an instrument by which the issuing bank guarantees the satisfactory performance of a contract or the non-happening of an event. So there could be a performance guarantee or there could be a financial guarantee. And customer application so you should have customer application, underlying contract, draft of guarantee vetted by legal department, treasury approval for the bank of beneficiary, and competent authorities approval, collection of charges, and ensure compliance with the regulatory guidelines. Any query till this?
Any queries from the members? No, sir, you can proceed, sir.
So we will now move to the last portion of the presentation, which is NPA identification and clarification and classification. So basic criteria of this NPA, when we identify NPA, if interest and principal remain overdue for a period of more than 90 days. If interest is overdue, a company has granted term loan of 3 lakhs rupees, and if you see the interest charge is 1500, 1502, 1505, 1507, but it is not paid, that means this account is NPA. Now second case is the interest is overdue, company has granted loan of 5 lakhs and repayment with monthly installment of 50,000. So he is serving only interest but not the principal. That because of that this account will become NPA. Then now we will move to the say in case of some other term loan where there are EMIs. So in case of EMI based term loan, what you have to check is the ideal balance and the actual balance outstanding. If the ideal balance is more than actual balance, and then it cannot be NPA. If outstanding balance is higher than the ideal balance, and if it is crossing the 3 EMI, the difference between these two is 3 EMI, that means it is 3 EMI overdue and it should be classified as NPA. Now the challenge comes in case of this EMI based loan is the prepayment. So you need to understand how the banks are accounting this prepayment. Like I will give you, so what happens that many times the customer prepays the loan. So there are two options in such case. Either the EMI needs to be reduced, or the tenure of EMI or tenure of loan needs to be shortened. So what bank has done, because what happens that if the borrower prepays the EMI, the interest which is charged to the borrower is reduced, and accordingly the amount get adjusted. So in this case the theoretical balance, if you go by the theoretical balance, ideal balance, what they call, or theo balance, and outstanding balance, you will see that there is no it is not no difference of more than 3 EMI, or there is a case where theoretical balance is higher than the outstanding balance, but that benefit of lower interest has been given to the borrower. Then in such scenario it is important that it has been treated as a principal repayment, and the EMI should have been adjusted. Otherwise the borrower get double benefit, that he he gets interest which has been charged is lower. At the same time, he gets adjustment in this ideal balance also. So it is requested for you to check how the bank is accounting it. In case of Finacle, there is a concept of overflow. So if it is going by the overflow concept, then the system has been designed as such, so you can accept it. But if it is any other software, you need to understand how it is done. Now cash credit and overdraft accounts, there are three criterias are there. One is if the outstanding is more than sanction limit or drawing power, whichever is lower. So if the that is the one criteria. Second criteria is that if the sanction limit is if the account is within sanction limit but there are no credits in the account. And third criteria is if the sanction limit is if the DP if the outstanding is not higher than the DP continuously, but the credits are not sufficient to serve the interest. So this you need to, all these three criteria, if it gets satisfied, then only that account is considered standard, considered as NPA. Otherwise that account is standard. Now what happens that this cash credit account is a kind of a very for evergreen cash credit account is always easy for an borrower, because what happens that this is a running account. So it may happen that you have to just show the credits in the account. So the genuineness of credit needs to be seen. So like that, if in this specific statement, if the specific scenario, if you see the outstanding balance remains continuously in excess of sanction limit or drawing power. So the DP is around 2,50,000, but outstanding is always more than the 2,50,000. DP is 2,10,000, but outstanding is about 2,10,000. Hence, this is for 90 days. So this account should be classified as NPA. Now, typical what happens in that, the borrower is smart enough. So what he does that, he to show that this DP is coming down, on one day, on 20th Feb, he will bring some amount from somewhere, he will manage it and bring amount which will bring that DP below 1 day, below the limit for a day. On immediately on 1st or 2nd March, he will withdraw that account. Whether such solitary credit should be considered or not, that is a judgment should be used by the auditor while reviewing that account. If that account is showing stress constantly, then in that case you should consider these solitary credits as ingenuine credit or non-genuine credit, and should not allow these credits to be considered for the for keeping that account as standard. But as an auditor, we should not go overboard in terms of saying that this account should be NP because there is only one credit. One credit and one debit immediately. We need to see the genuineness of the credit. We need to see whether the credits we need to see the genuineness of the credit. We need to see whether the business of the borrower is such that he always gets some seasonal repayments, and that is in bulk. If that is the case, then you can allow that. But if the borrower is in a regular business, it's not a seasonal business, in that scenario we as an auditor need to see whether that credit is genuine. Or certain point of time we also observe that as an auditor, that there is a credit in the account which is a rounded credit. If I am a business, it's not always happen that I will get a 15, my billing is a 15 lakh. There is always a GST involved in that. So even if a billing is a 15 lakh, it is a 15%, 12%, 18%. If we see GST, that means the receipts which the borrower is getting cannot be in the rounding of figures. But if you see the credits are getting in the rounding of figures, that means he might be having certain accounts somewhere from where he is getting, or he is not getting bill to bill payments. So we need to understand what kind of a business is there. So there is a possibility that the borrower is not getting bill to bill payments on a regular basis. His arrangement is such that he gets a payment in bulk only. So if such kind of, this needs to be understood by having a discussion with the branch manager, whether the branch manager is diligent enough in his monitoring to understand the understand or identify such issues and have sought clarification from the borrower. See, such accounts, like what I said in the case of a rounded off credits or something, may not be eligible for becoming NPA, but such accounts can such if the branch is not diligent, it can be reported in your LFAR about the attitude or the approach of the branch in an objective manner, by not commenting on the directly, but by saying that these are kind of a credits are coming in the account which are rounded credit. However, the branch has sought any explanation for the same from the borrower. So similarly, in use of inter-office account in crash credit or term loans are rampant. What we saw is that for the disbursement purpose, instead of disbursing it from the cash credit or term loan directly, it has been in certain bank there is a Finacle workflow or CBS workflow is such that it goes to a parking account, and from the parking account it is then transferred to the RTGS parking account, and from that RTGS is made centrally. Now in such scenario also what we observed that these inter-office accounts have been used for the purpose of evergreening. So there is a possibility, or there are transactions like in term loan or cash credit, the inter-office account is debited and cash credit account is credited for a day, which brings that cash credit accounts within limit. On the next day immediately the reverse entry is passed. So when automated system, when it checks that it says that it is below the limit for one day, it ignores that account and it keeps that account at standard. But when you go through such accounts, you realize that this is just a kind of a sham entry which has been passed in the account, and because of that the account has been kept at standard and the system could not identify. See, that's where our role will come, when most of the things are getting automated. SBAC is there, system based classification is there. If it is getting automated, then every account will get identified. But if borrowers with the consultation, with the conveyance with the branch officer, or borrowers independently are trying to camouflage the system or trying to maneuver the system like with such case things, then that's where our human intelligence comes in picture. Otherwise, we talk a lot about artificial intelligence, chat GPT, all those matters, but it cannot replace human intelligence, because it is always a trained based analysis which systems do, whether it is artificial intelligence or chat GPT. It is based on someone has created, it will collate and produce, but it cannot produce itself. So it's a knowledge based creativity and not genuine creativity or human creativity. And as we know, we humans are more intelligent, and they have a lot of various modes where they can actually surpass the system, contravene the system, so that when we are as an auditor, we need to think like a thief than a police. When there is a systems are there which can catch all these matters, which are objective matters where system can play a big role. Then third case is where there are no credit continuously for 90 days in the account, even though account is within limit, it has to be classified as NPA. The basic premise for identifying an account as NPA in case of cash credit is that the cash credit is given for the regular business. So the cash credit account should reflect, or it's a mirror of the actual business which has been which that borrower is doing. So if he is doing genuine business, if he is doing regular business, there will be credits in the account. So such errors will not happen, or such discrepancies will not come. There is no credit, that means that the borrower is not doing, borrower's business is not working, or he's diverting these funds to somewhere else from where his business credits are coming. So if the cash credit is given for the purpose of the business, then why he has to have other account with other bank for doing his regular business or regular transactions? So there is always kind of a explanations, justifications, excuses borrowers have for maintaining current account with some other banks. In case of public sector banks, there is an always excuse given is that इनका internet banking, mobile banking इतना अच्छा नहीं है. आई हैव अकाउंट इन HDFC, ICICI और एक्सिस. उनका मोबाइल बैंकिंग बहुत अच्छा है, इंटरनेट बैंकिंग बहुत अच्छा है, वहाँ से मैं टैक्स भी पे कर सकता हूँ और वहाँ से मैं इमीजिएटली ऑनलाइन RTGS भी कर सकता हूँ. सो बिकॉज ऑफ दैट आई एम मेंटेनिंग माई करंट अकाउंट विद दोज बैंक्स and I am making all payments to that. So ठीक है, means there is no harm if you are doing it. There is RBI circular which restricts it, but if there are but that RBI circular also RBI has given certain leeway. So if that is the case, then you should tell him that boss, you means the bank should tell him that you route your sales transaction through us, all receipts you should route through us instead of that bank, or on whenever you want we will give you the facility of internet banking to transfer there. If you are so concerned your cash management, they are giving you a good CMS mechanism and all that thing, you transfer it. There could be a standing instruction on the for that we will give you waiver for that. So whenever that amount your credits crosses this much amount, it will be transferred to that bank. But bank should have the CC, the bank which is giving the cash credit should have a control over the turnover or sales of that borrower. So cash, so that's why these criteria which are defined as for the NPA purpose are keeping in mind that it should immediately identify the inherent weakness in the borrower's account and should mark that account as NPA before it goes bad further. So in case where outstanding balance in the principal operating account is less than the sanction limit or borrower, but credits are not enough to cover the interest debited during the same period means 90 days. So if you have to go back, if you are on 27th Feb, you have to go back to the 90 days. How much is interest charge? If it is like this, what I have mentioned, 1500, 1501 and 2000 and 1504, but amount credited is only 1500. In that scenario, the account should be marked as NPA in case of a cash credit account. So the objective criteria are taken care by the clear by the system nowadays, but at the same time how someone is trying to contravene the system, how someone is trying to camouflage the system, that we as an auditor need to identify. Then another criteria is that stock statement relied upon by the banks for determining drawing power should not be older than 3 months. The outstanding in the account based on drawing power calculated from older than 3 months would be deemed as irregular. So the stock statement of his company has submitted of July 2020 and no statement is received, that means that he might not be doing business, then that account should be marked as NPA. Or anything which is, any stock statement is valid for 3 months if we consider, then anything which is beyond 3, any stock statement which is dated beyond 3 months and there is no other stock statement available, the account should be marked as NPA. If the regular or ad hoc limits, credit limits are not renewed within 180 days from the due date or date of sanction, now then that account should be marked as NPA. Now there is a big problem in various banks is that they have come out with the concept of short renew. So if the borrower is not submitting the details for the purpose of renewal, then in that case the bank carries out a short renew. And because of that, what happens if the date of the renewal is July 2022, they give a short renewal of 90 days, so it gets automatically closer to October 2022. And after, from the October 2022, the 6 months starts. Actually, that is not a intention. The RBI nowhere talk about the short renew. RBI only talks about the regular renewal. So what happens that if the short renew is done and the system starts calculating 180 days from the date of October, then that account will become NPA, will not become NPA at all in the month of March. So in such scenario, if the even the process is not started even in the month of March, or even, and you came to know that the borrower is not cooperating, that is a clear case of non-cooperative borrower. It cannot be said, you cannot do away with short renewal for a regular renewal. You find in the statement correspondence with the borrower that is not bank is sending reminder for submission of audited financial statement, submission of CMA, but borrower is not acting on it, he is not giving any reply. These accounts, such accounts, will be classified as NPA. If there is a genuine error, if there is a problem from the borrower side of the non-cooperation. There is other problem at the bank side also in case of a short renewal. बैंक ब्रांच के पास टाइम नहीं रहता है, ब्रांच इज बिजी विथ लॉट ऑफ रिन्यूअल, सो वो क्या करता है, एक बल्क में शॉर्ट रिन्यू कर देता है सब अकाउंट्स का. बोरोर जो जेन्युइन बोरोर है उसने सब कुछ सबमिट कर दिया है फॉर द पर्पज ऑफ द रिन्यूअल, एंड bank is taking its own sweet time for preparing appraisal note and all those things, and that is the reason the and you come in and you go there in the month of March, short renewal हुआ है अक्टूबर तक का, और ब्रांच कंटिन्यूसली उसने स्टेटमेंट लेके रखा है, ब्रांच के पास स्टाफ नहीं है, SME CPC में भेज के रखा है, SME सिटी सेंटर में भेज के रखा है, वहाँ पे कोई कुछ डिले हो रहा है. If that thing is happening, no, then you cannot punish the borrower on this ground by making it NPA, because in making an account in NPA also very bad implication for that borrower. His CIBIL gets distorted, he will not get finance from other parties. So if there is a failure at the bank's branch side and delay on the branch side for renewal of the cases, it should be reported in LFAR clearly. And you should mention that there is a lethargy. You may not use the word lethargy, but you may use a better word like that. There is an inefficiency at the branch side, that renewals are not happening on time. SME CPC doesn't have additional staff, so renewals are getting delayed, and then short renewal route has been used by the bank branches for CC accounts. So if you subjectivity whenever is there, we need to, as an auditor, we all are qualified, we are experienced enough to apply our judgment, and when you apply some judgmental skills or judgments, please note down in your working papers why you have applied that kind of a judgment, what is the genesis of applying that kind of a judgment, and keep it in your working paper file, so that tomorrow anything happen with any of these accounts, then you can always go, if someone asks any clarification, you can show that paper. ये सब कुछ होता है, 2 साल का अकाउंट NPA हो जाता है, तीसरे साल हमको कुछ भी याद नहीं रहेगा कि 2 साल पहले हमने क्या डिसीजन लिया था, क्यों वो डिसीजन लिया था, क्यों अकाउंट को NPA नहीं किया था. ओके, सो प्लीज़ प्रिपेयर द डॉक्यूमेंट इन सच दैट यू नीड नॉट रिलाई. कभी कभी क्या होता है, वो आर्टिकल चला जाता है, उसको कुछ टाइप करने के लिए बोलता था, ब्रांच ऑडिट ख़त्म हो गया, हम लोग वो छुट्टी पे चला गया, 12 तारीख को ब्रांच ऑडिट ख़त्म हो गया, वो IPCC का उसका एक ग्रुप पेंडिंग था, वो छुट्टी पे चला गया इंटर का, वो उसने टाइप नहीं किया, हम लोग भी भूल गए. सो आस्क हिम दैट बॉस, दिस इज़ व्हाट यू नीड टू write it down, this is what should be done as a documentation, you complete it, then only I will allow you to go on leave. So please see that you complete the documentation immediately within next 3-4 days after completion of branch audit, so that everything is fresh in your mind, so that you can document it. Bill discounting, account will slip to NPA category if the bills are overdue for more than 90 days. Agriculture advance, installment of principal or interest if it is overdue for 2 crop seasons for short duration crop, and if it is 1 crop season for long duration crop. We all are from Mumbai, so it's always, when we get a rural branch, we always grapple with the understanding what is which crop is a 2 crop season crop, which crop is a 1 crop season crop. So there are guidelines given by state level banking committee, SLBC, and which tells that which crop is for a 2 season crop, which crop is a short season duration crop, which crop is a long duration crop. And for that purpose, you have to, whenever the sanctions are made, in Maharashtra there is a Sadbara, in Karnataka there is something called Patta, in West Bengal if you go, they also call it Patta, in Bihar there is some other name, so in Gujarat there is some other name. So when you go there in those documents, you understand where your branch is located. If it is a rural branch, what is their regular crop pattern, what crops they grow, against which the crop loans are given. When you discuss this with the branch manager, you come to know that. And when you come to know that, then you see that, and when crop loan is given, there is a formula of SLBC is there, that if this much is the land, this much hectare land is, this much is the finance should be made. Okay, so finance is made based on the hectare in the your Sat Bara or property card. So based on that guideline, you check that when you do an advances verification of crop loans on sample basis, you have to do it as a part of the process. You check that whether that has been mapped correctly, the loan has been given correctly. And in that, only in that property card Sat Bara, it is mentioned that what are the crops which has been grown in that land. There is a whale, these are the crop, like it is mentioned that rice is taken, or it is mentioned that wheat is taken, sugar cane, so it is mentioned. So when you go through that on sample basis, when you check that, you see that which kind of a crop is taken, map it with SBLC guideline, you will come to know whether it is a short duration crop, long duration crop, single crop season, kharif crop season, rabi crop season, and from that you will come to know whether that account should be classified as NPA or not. So थोड़ा सा इस पे आपको ब्रांच में जाके अंडरस्टैंड लेना पड़ेगा इन रिस्पेक्ट ऑफ इफ़ यू गेट अ रूरल ब्रांच, बिकॉज we are not, we as in Mumbai, we are not conversant with these kind of languages or this kind of crop seasons. And again in India, if we get a rural branch, normally we are in Mumbai, we get a branch either in rural areas of Maharashtra or rural areas of Gujarat or Karnataka. So in that case we are little bit get confused that how to audit this. At the same time, how to, whether the classification which has been done on the single duration crop, long duration crop, short duration crop is correct or not. So in that case you can get help of this SBLC circular at the branches which is available, and they can, and you can understand from the reading of those circulars, which may take some time, but of course these branches are smaller branches, so you can complete it faster. Then in agriculture advances, the installment of principal or interest where in case of one crop season, if it is a long duration crop. So like I will give you example, sugar cane is a long duration crop. So the season for a sugar cane is 18 months. So normally what happens that sugar cane farmer start cultivating the sugar somewhere, means the standing sugar cane is somewhere in the month of December, and in the next October there is a harvesting season of sugar which is called where the sugar factory starts operating, and it normally runs from October to Feb, which is in Marathi in Marathi they call it Gap season, or it is called harvesting season in English. So or crushing season which they call. So this crushing happens in the period of October to February. So from in October months they start cutting the crop, they harvest the crop and they give the sugar cane to the sugar factory, and by the end of the March the sugar factories normally pay back to the borrowers, so they pay back to the farmers. So there is a possibility there. So that crop, sugarcane crop, when it will become NPA is 18 months from the previous crop season. So that you need to understand when they will get when they will get payment from the sugarcane factory, when it was, so what is the due date based on this understanding of the crop season, and when it will become NPA is after the next crop season is over. So this is a typical product which we those who are from urban auditors, we need to understand, and we need to actually study about the product. Then there are two criteria of NPA classification, is that if the realizable value of the security as assessed by the bank, approved valuer or RBI is less than 10% of the outstanding in the borrower account, the executed security should be given, the asset should be straight away classified as a loss asset. It may be either written off or fully provided by the bank. So what happens that at the time of if the outstanding in the account is 5 crores and the realizable value of, even if it is a standard account, if the realizable value of security is 40 lakhs, that means it is below 10%. In such case, that account should be fully provided, mark as NPA and provided fully. Similarly, in the next criteria, what it says that if the realizable value of the security is less than 50%, then the value assessed by the or accepted by the RBI at the time of the last inspection, as the case may be, such NPA may be straight away classified under doubtful category. So if an account is NPA, see, there is a difference in these two guidelines. First is where the even if the account is standard and realizable value post sanction, so there could be certain accounts which are kind of a personal loan, it is not for that, but these are the secured loan, but at the time of assessment only the realizable value is higher, and when you actually check the realizable value now at the time of classification is below 90 days of the outstanding balance, then it should be marked directly as a loss. But once an account has turned to be NPA and the realizable value is less than 50%, that account should be classified directly as the doubtful. So we need to understand the difference between these two conditions. Though they are related to erosion in value, there is a slight difference once one consider the standard accounts other than those who have the security or had security earlier, or other than those who are like a personal loan or have been sanctioned only at the lower security, and these are, in second case, it is only NPA accounts where security value has been fallen. Then certain advances guaranteed by the government, if it is the central government, then the advance should not be it should not be classified as NPA, but interest accrual should be stopped. If it is a state government, it is like a regular other advance. So a company has been sanctioned credit limit of 5 crore, which has been backed by guarantee by central government to the extent of 80%. So in such case, what will happen is that 4 crore is actually guaranteed by the government, so that portion will not become NPA, but 1 crore portion will become NPA, and the bank has to provide for that. So in this case, what happens that the borrower is made NPA, but central government guarantee is considered as the security for the purpose of calculation. So the provision is made only on the 1 crore, but interest accrual should be stopped immediately. The guarantee is for the loan amount and not for the interest. So interest accrual should be stopped immediately, and income should not be booked in case of an interest accrual. So advances guaranteed by government. So state government advances, there is no concession available. It should attract a regular classification of advances. Now provisioning. So if NPA is this is a table which I have given. NPA is between 1st April 22 to 31st March 22. In the case of secured, unsecured, 15%, unsecured initial 25%, doubtful one 21, April 21 to March 22, 25% for secured portion, unsecured portion 100%. Then for day 2, 19 to 21, then 40% to 100%, and whichever is wherever NPA rate is before 31st March 19, 100% should be provided irrespective of the security value. Now this is we complete our session. So any queries, clarification, I am open for that.
Any queries from the members? Any questions for so that there is ease while conducting statutory audit for the banks? I guess, sir, everyone has understood clearly about the session. So we may conclude the session, I guess, sir. There are no questions as such.
Okay.
Yes, sir. So on behalf of Chambers Study Circle, sir, I would like to extend my thanks to you, sir. Thank you for taking your time and giving us a detailed explanation about the bank audit, sir. We are very indeed grateful for you, sir. Thank you.
Thank you very much.
Anyone wants to share their experience? Dilip, sir, are you available? Yes, Dilip, sir, are you available, sir? Anyone wants to share any experience about today's session? How was it for them?
I'm traveling, so I won't be able to speak.
Yes, Nilesh, sir. No, sorry. Dilip, sir, yes, a little bit. Anyone wants to share their experience? Okay. Thank you.
Thank you very much.
Thank you, sir. Thank you, sir. Thank you for your time, sir. Thank you, members, for attending today's session. I hope the bank audit goes smoothly for all of you.
All the best. Thank you.
Thank you, sir.